Over the last few months, there have been no shortage of reports speculating over the future of Goldman Sachs CEO David Solomon. But it seems there might be a big disconnect between media coverage of the man and the views of the board. Mike Mayo, Wells Fargo Securities head of large cap bank research, joins us to discuss. So Mike, just walk us through some of perhaps the discrepancies between what's taking place and the board here versus what's actually the story being told to the public.
Well, I've been one of those people watching these stories and wondering what's going on. So I requested to have a meeting with the lead director of the board of directors that oversees the CEO and the rest of the management team. And I had that meeting yesterday. The lead director's nickname is Bio. And I had met with Bio before 7 years ago. And I said, what's the state of the CEO, his status? And he said, why are you asking that question? Look at our results, look at our execution, look at our strategy. So on that basis, based on the cold hard facts, they have had best-in-class book value growth the last 5 years, and they've had best-in-class market share gains. So that was the start of it. But then what about those intangible soft factors that's written about in the press? So I followed up with questions on that, like what about your reputation? And he said the reputation is actually fine.
Mike, what about morale? Because that's something that we've been hearing a lot about, the fact that many of the partners have been unhappy, to say the least, with some of the actions that Solomon has taken.
That was another one of my questions. The CEO is on record as saying that the partner turnover is no different than normal. And the lead director reaffirmed what the CEO had previously said. They did acknowledge that they've made some mistakes at management level and at the board level. They said that the consumer lending strategy, they should have not done that the way they did it. They said the disposal of on-balance sheet investments should have happened faster, and they should have expanded their third-party alternative investments faster. And when it came to departures, they said, yes, again, this is the lead director of the board of directors, yes, they've lost some talent that they did not want to lose. And they've also lost some people who just disagreed with the new revised strategy. Having said that, and this all goes to reputation, he said the reputation with clients remains strong, and the lead director of the board visits with the clients. The reputation with employees based on their internal surveys, I don't have access to that, but he says he analyzes that, and those are fine. And as it relates to the broader reputation, the pipeline of talent, Goldman Sachs had over 1 million applications last year for people applying to jobs. So it looks like the reputation from the perspective of the lead director of Goldman Sachs, who has a lot more information than I do, the cold hard facts are good, and based on him, the soft factors are also fine. So despite the news stories, and I've been commenting on many of these, it looks, based on my meeting with the lead director, the board of directors of Goldman Sachs yesterday, this puts a fork in the issue about the CEO issue, or what turns out to be a non-issue. And I know people have been talking in terms of days or months, but really the question is a matter of years. And if he can execute on his medium-term plan to improve returns to the mid-single digits and improve the returns in wealth and asset management up to the mid-single digits, that's been depressed. That's 1/3 of the business. And the other 2/3 of the business has been crushing it. That's global banking and markets.
Yeah, and Mike, so all of that considered, are there leading contenders waiting in the wings that the board has on their radar, even if this kind of changeover at the helm would be years out from now, as you were mentioning a moment ago, based on those discussions?
You know, another data point in the discussion, and it hit me after the meeting, I said, what are the board's priorities? And the first priority is execution, execution, execution. And that's what they're super focused on. And we talked about some other topics, and then further down the list was AI, actually, is a big topic, and tech and improving efficiency. And succession was really the fourth item that came up in terms of a board priority. And it only came up in the sense that Goldman Sachs has identified the next 200 leaders beyond the 30 or so management committee that they might want to develop over the years. But that was the only context succession came up. It was listed as the fourth priority of the board after some, major topics before that.
Is that a red flag, Mike? Is that something that maybe investors should be a little worried about?
No, Goldman has a history of cultivating talent. And it was interesting, back to that partner leaving discussion. And the lead director of Goldman Sachs said, you know what? Sometimes we'll actually encourage partners to leave. And we may lose a couple years of their expertise, but that allows us to have 10 really good years of the next up-and-coming partner. So I thought that was an interesting perspective. And my sense is they ease partners out the door. So some of the departures were kind of desired by Goldman Sachs. So no, I think they have a deep bench. And you see the Goldman Sachs diaspora with ex-Goldman partners and others leading all sorts of businesses and being leaders in government and business. So that's not, there's other red flags we can talk about, and certainly risk and cyber and the ability to execute on their new plan. But I don't think the talent, the bench at Goldman Sachs is an issue.
Of the prioritization, of the ability to execute on that new plan that you're talking about, Mike, does that change in one direction or another very vastly your own kind of not just evaluation of the company, but evaluation of their outlook, evaluation of how they can actually meet some of those targets?
Absolutely. I think the question now is, look, I was very critical, and I still have, concerns that can they actually execute? But here's a company that has increased book value by 50% over the last 5 years, and they trade close to tangible book value. So implicit in that statement is investors have concerns, and I think the concerns really are about their ability to execute and improve the return on equity higher. And one of the root causes is the asset and wealth management business. It eats up 30% of capital. The returns are mid-single digits. They need to dispose of a lot of their on-balance sheet investments. They said they're going to do that, but what's their ability to do so without taking outsized losses? And when will the capital market cycle return? But if things come together and they continue to gain share and the capital market cycle turns and they dispose of some of their on-balance sheet investments, then their returns should be higher. And I got the sense from my discussion yesterday with the lead director that they're not satisfied with the 10% or 11% return, and they're going to push very hard. And so long as the plan is executed they're on that path over the next few years, then this discussion about CEO staying or going is irrelevant, I think, in the mind of the lead director of the board, and he represents the board.
Mike, just lastly, while we have you, where does it sound like Goldman is prioritizing the consumer, and particularly some of their efforts within consumer banking that have come to light over the past few years?
They're waiting to take some actions with their Green Sky. They've sold loans in Marcus. Certainly, they've gathered deposits, 120, 130 billion or so of deposits. That's helpful. But the prioritization of consumer is way down the list. When they talk about their two main businesses, 2/3 and 1/3, consumer's not part of that. So it's really about that's going on the back shelf in terms of their priorities, even though they're still gathering deposits.
All right, Mike Mayo, always great to get your perspective on here. Thanks so much for joining us this morning. Mike Mayo, Wells Fargo Securities analyst there.